Last week, I made over $1,000 trading London session, and in this video, I will show you the exact strategy that I used to do this, along with 2 live trades that I took. I also posted these 2 trades live in my Discord server as they happened. As you can see, I took this long trade on gold, and then the day later, I took this long trade on gold, which smashed our take profit in less than half an hour. So this will be the link in the description. I post all my live trades on here every day. So without further ado, let's get into the charts. Now, first things first, when is London session? Well, London session is between 7 a.m. to about 11 a.m. and this is my time, which is London time. So 7 a.m. to 11 a.m. London time is when London session is. So convert this to wherever you live. Maybe you're from, I don't know, Vietnam and you want to convert this, but yeah, convert that. And now the first things first about this strategy is London session always comes after Asia session. And the thing you need to know about Asia session is Asia session often consolidates a lot. There's not much volume in the markets and there's often just a lot of consolidation in the charts. But Asia produces us very 2 key things, and that is called the Asia high and the Asia low. And these are just the biggest and the lowest prices price got to during the Asia session. Now, the thing about these Asian highs is they have a lot of resting liquidity. And if you don't know what resting liquidity means, I made a full guide to liquidity. I will link in the top right hand corner right now so you can watch that first and then come back to this video. But I won't be going into too much detail about liquidity, but you just need to know that there's resting liquidity above Asia high and below Asia lows. And the thing is about London session is London session loves to hunt these highs and lows. So if we have London session after, what London session usually does is it usually tries to sweep either of these highs or lows. And probably what a lot of retail traders are taught, and what you were probably taught, is that we should wait for price to break out of one of these levels and then go for a breakout trade. So if it breaks past the low, then we go short and we try and trade a breakout. But this is not a good strategy because you will end up being liquidity for traders like me. And this is because London session loves to sweep these areas and then retrace and go in the other direction. And this our strategy is we want to catch these retraces in the other direction. So first things first about our strategy is we need to see a sweep of liquidity. Now this could be Asia highs or lows, or it could be an hour high or low or 4-hour high or low. But what London likes to do is it likes to sweep liquidity and then reverse. Once again, don't know what liquidity is, watch my video. So let's say London started where Asia finished and we created market structure and then all of a sudden we sweep the liquidity. We take this low out. That is our first thing ticked off of our strategy. We see a sweep of liquidity. Now, this could be a breakout. The retail traders could be right. So we don't just want to instantly go for a long position and just say, oh, this is sweep liquidity, it's going to reverse. Because we don't know it yet. We need to wait for more confluences to confirm our trade's direction. So the next thing we want to see, if we add to our strategy, I want to see a change of character. Now, very simply, a change of character is when the market direction reverses. So let's say we create an uptrend, higher highs, higher lows. If price was to all of a sudden come down and break this higher low, sweep past it, the uptrend would no longer be valid and this would be a change of character because it looks like price might be heading into a downtrend. So what we want to see now is we want to see price create a change of character. As you see, we're in a downtrend and all of a sudden we come up and we break the lower high. This indicates that the trend might be shifting. But that is not all we want to see. We want to see a third thing to confirm that this trade is going to be a retracement. And this third thing is called a continuation confluence, okay? And these could be anything from a fair value gap, an order block, a supply demand kind of thing, but we want to see something that shows us continuation. So let's say in our example, price pushed up, created this change of character, but it created a fair value gap in this zone. So we created a fair value gap in this area. What we want to see is we want to see price come back into this fair value gap, and then we want price to show us a rejection. Once price shows us a rejection of this fair value gap, we will then go for our position. So let's add this into our strategy. We want to see a rejection. Now, a rejection could be anything from a hammer candle, an engulfing candle, And I once again won't go into too much detail because you should know what these are. But a hammer candle is basically a candle with a long wick that came out of a fair value gap on order block, which shows price was once at this level and then is rejected off. And an engulfing candle is when you have a candle in one direction and then next to it you have a candle in the opposite direction that is bigger than the candle next to it. It completely engulfs the candle. But both these things show that price might be rejecting off of an area. So once we see price reject off of our fair value gap, we see a liquidity sweep, a change of character, a retracement into a fair value gap or an order block, and we see our rejection. This is now good to enter our trade. So we'll go for a long position. We'll put our stop loss below the liquidity we just swept. So we created this low once we swept the Asia liquidity. We'll put our stop loss below it. And all we'll do is we'll either target Asia highs if we took Asia lows out, or we'll take or aim for another area of liquidity. It all depends on how much risk we can get. If we target Asia highs in this session, we'd only get a 1-to-1, which isn't really good enough. So I target another area of liquidity. So this is our strategy. We're sweep of liquidity, a change of character, a continuation confluence, and a rejection. And this is what we're going to be looking for. And I will now show you 2 examples of trades that I took. So the first trade I took was a long position on the 10th of July. So I've drawn a box around this position and I can tell you exactly what I was thinking. So I took a long position, if we go back to the screenshot, at about here. So I went long here, stop loss here, and take profit up here. A very nice trade. I think it was quite a lot of risk, maybe 1-to-5, 1-to-6. But why did I take this? Well, let's mark out when London started. So London started at 7 a.m. here. So London started to the right. What we did was price came up, broke Asia highs, came down, went above Asia highs again, swept the liquidity above this high because there was liquidity here. Once it swept the highs, we then retraced, broke the changed of character, retested into this order block, and then sold. And this could have been a valid trade. I missed this trade because I was asleep, I'm not gonna lie. But once we did that, price came down and we swept the liquidity below these lows here. And I thought, okay, once we swept the liquidity off these lows, this is going to be a valid setup. So we'll look for what we have seen in our strategy. And this is, if we drag it down here, once I see a sweep of liquidity, I want to see a change of character. Now, what did I see once we swept the liquidity is I saw a change of character here. Because price broke this previous high at this zone and we started creating bullish structure. Now I waited for, I need to wait for a continuation confluence. Well, we came back down, retested off this order block, but I don't think I was awake then. We came back down, retested off this fair value gap, another good place to enter. And then we came back down again and retested off this order block down here. And at this point I was awake and I entered in the trade off this order block. Stop loss below the low of the liquidity we just swept and take profit targeting Asia highs or the next area of liquidity up here. And as you can see, this trade played out perfectly in literally no time at all. I think this took us about half an hour to make a 1-to-5, a 1-to-6. So this shows the power of this strategy. Again, if you look at my Discord server, I said long on gold on the 11th of July. And as you can see, this smashed our take profit again. Now, if we go over to the 11th of July, I've marked it out and I can show you the exact same thing again. So once again, let me mark out when London started, and London started to the right of this right arrow. We had Asia highs up here. What did we do? We came up and we swept Asia highs and then retraced. And once we retraced, we then broke these lows here and we took the liquidity out of these lows. As you can see, this is pretty much the exact same setup we took the day before. So the chart basically repeated itself twice in a row, allowing me to pretty much print money. It's so simple. But once we swept these lows down here, we then need to wait for a change of character. Where do we see a change of character? Well, we see price came up, created this high, and then price up here broke this high, creating a new bullish structure. Then we need to wait for continuation confluence, where we had an order block down here in this zone. Price came back down to retest this, and we created a very large rejection. So I went for a long position off this rejection. Stop. Where do we put the stop? Below the low of the liquidity we just swept, and we target Asia highs or another area of liquidity, which will be up here above this high. So we targeted this area up here at the high, and there we go, our trade hit take profit. Just like the screenshot I showed you, took long and smash a take profit up there. Now this is what done on the 1 minute time frame, simply because I like trading not for very long and I like high risk trading, a lot of movement. But again, this will work on most of the time frames out there. But look, 2 trades following our simple strategy, 4-step strategy. Literally 2 days in a row, we had the exact same setup and it allowed us to print money. And this strategy is so good because it happens all the time. And this works on any pair. I like trading gold because it's the most volatile and I've been trading this pair for so long, years and years and years. But hopefully you like this video. Join my Discord link in the description to see the exact trades that I take. I post them live all the time. And other than that, I'll see you guys next time. Peace.